Okay, folks, welcome to Thursday Night Stock Charts Live. Happy Halloween. Now, I know I have a lot of these rugby shirts. I wore this a couple of weeks ago. I was very cognizant of it. But you know what? I need to be as a experienced as a YouTube presenter extraordinaire. I need to be professional. I need to be seasonal. I need to be with the vibe of the people. And therefore, I chose to take the dare of wearing the same item within a monthly 30-day period, rolling period of time. So I don't know if or not you can hear that music. I have Halloween music on. I can't hear it on my end, though. Let's see. Let's share my screen. All right. Let's try to get some background here. Let's see what we can do here. We got to do this a little bit right. Boom. I like. Oh, this is a good one. All right. So let's get to it. All right. So we have earnings out after. Let me make sure my audio is good. Alan, thank you very much. Appreciate that. All right, so we have earnings out on Apple. We'll go to that in a moment, and on Amazon and on Intel. We have, this is the heat map for the day, and obviously Infotech caught it on the chin. Consumer discretionary names did okay. By and large, they did okay. Costco being the outlier. Walmart was strong, up nearly a percentage point. Altria, they must have reported because they were up very, very strong on the day. And the energy stocks, they're looking pretty good as well. They were up on the session along with crude oil prices. We'll go to those charts in a little while when we go over the weekly charts of the major averages, and we'll talk about what our thoughts are for the remainder of the week and where do we think we're going moving forward. I mean, a lot of technical damage happened, but it didn't happen this week. It happened last week. This week is a follow-through week. So we'll talk about what's setting up for the markets over the course of the next several trading weeks. Now, our day was a bit mixed. I owned Coinbase. Coinbase went down. I don't have a big position, but it's a big move. So I got hurt on Coinbase today. Boeing went down. I don't know where that closed, to be honest with you. But I don't think it took out previous lows. And we're short. So we had a short position on the Qs of SQQQ, and that helped save the day a bit. So, it could have been a lot worse. We were short, we were ready, but we did add more to shorts today in Netflix, which was up. And I'm not aggressively bearish on Netflix. The shot is that what I'm betting on is that if we get a continuation move lower on the triple Qs, on the NASDAQ in general, then at some point in time, Netflix will buckle. It's a put spread. It's a defined risk trade. I know exactly the maximum amount I'm going to make. I know exactly the maximum amount I'm going to lose. So, not a high risk trade. And if it goes against us, we get out. But we added to shorts today. And what else is happening today? We went over energy. Utilities were up. So healthcare was up. So the areas that you would expect to move up higher on a day when there was fear in the market with VIX rallying, if there were going to be sectors that move up, they did. So again, healthcare, telecom, those are your dividend payers. Utilities all did very, very well. Energy, TrendSpider put out a chart. I tried to find it. I could have sworn I retweeted it, but it went back about 10, 15 years, and they X'd out. They only included years where you had an election year presidential election year. And while generally this is not a favorable period of time for the energy stocks, when you only price in or factor in, I should say, the presidential years, energy stocks outperformed in a very, very big way. I'm scrolling through that feed right now. They put out so much stuff. I don't want to waste people's time. So why did it not get aggressively bearish on the market today? Let's face it. We're going into the most seasonally favorable period of time of the year. So what's a boy to do? We can't ignore it. This is the best month, November being the best month for equities, or at least the triple Qs and the S&P 500. Certain sectors like energy generally don't do as well, except for presidential election years. I'm still looking for that chart on Twitter to show you 20. God, they put out so much stuff. I thought I tweeted a lot. What is this? That's Costco. All right. While I'm scrolling through here, I'm gonna try to multitask, which is never ever good. So I'm gonna scroll and talk. I just happen to have this chart up here. I may be shorting lean live cattle, not lean, live cattle, because I believe that live cattle will tell us who the next president is going to be. Remember, Democrats, they don't want you to have the ability to grow your own food or to eat protein because they want you weak. But the conservatives, they want you to be able to eat meat. They don't want to tell you what to eat. And therefore, we have the lowest herd size since 1965 in the United States because of policies by the Biden administration. And I believe that if President Trump gets elected or reelected, then what they're going to do is they're going to price in a increase in cattle sizes, therefore driving down the price of cattle, which is why I'm looking to short it at current. So you can see this is a weekly chart, and I just had an alert that fired off literally right before we went live. And I keep doing that. I'm thinking lean hogs. Live cattle broke to new weekly lower lows here. So good stuff. We'll be talking about this, about shorting live cattle. I want to see how it closes out the week because the path of least resistance still remains to the upside for live cattle. So I don't want to short it too soon. I want to see how we close out the week. And if we break to new lower lows down below this line here in green and the line in yellow, the path of least resistance in all probability is now changing, and that would be to the downside. So you would need a futures account to do so. And I don't think they have an ETF of cattle anymore. So unfortunately, you will need a futures account unless there's an ETF out there that I do not know about. All right, let's get to Apple. I'm going to stop looking for that chart for a moment. Let's talk about Apple's earnings. I'm just going to go with the headlines rather than reading this fine print. Earnings. Apple slides after guiding below consensus, misses on wearables, China, and service revenues. So, bad news, okay? Simple as that. The market is priced to perfection. And what are they doing with the price of Apple in the after-hours session? 15-minute view. We're just off the lows of the session. Not horribly. I mean, the anticipated market maker move for options traders was about $8. And we're within that range. I mean, so we're down. It's not horrific. This is what the market makers had anticipated. Therefore, the markets are not shocked by this. So would I go shorting the market based upon Apple's earnings? No. I would think of it more as in an aggregate. What's the market price like? If these stocks are pulling back, why are they pulling back? Is it margin compression? Is it revenue growth? Is it just an EPS miss, which happens? As long as you're beating on revenue, the top line, that's all anyone really cares about, unless it becomes a real serious trend. So that is Apple. So I don't see any reason. We'll go to the weekly chart of Apple in a moment. Amazon jumps on record AWS profit margin, solid. So they're solid holiday quarter guidance. So what they've done here is that, remember a couple of weeks ago, we had the dock workers strike, and Lord knows what was going to happen to goods coming in from China, wherever, into the Amazon warehouses. Were they going to have a good holiday season? That was the question mark. Guess what? They just answered it. No concerns about Christmas 2024. So, what are they doing in the after-hours session? They are rallying. They closed at 186.40. The anticipated market maker move was about, Neil, let's round it up to a $12 move. We're within that range. Let's see how the futures market is opening up and behaving on this news. Looking at the NQ first, it's up fractionally, up over a quarter of a percentage point. The only reason why I'm saying fractionally is that, when you're down over 2% on the day, you would look for a bigger reaction to the upside, which we are not getting, but it's early. It's early. Let's take a quick peek at the S&P 500. This is definitely only up fractionally. So these may consolidate overnight. Perhaps when Asia opens up, they'll catch a bid. Let's take a look at, let's go to comments first. Let's say hello to folks. Okay, we got a lot of comments here. Sean, welcome. Thank you very much. Thank you. Mr. Pete, welcome. Gay. It's still playing. I can't hear it on my end. Is it loud? Let me turn it off. Is it spooky? All right, it's off. All right, where's comments? Let me know if that's off. All right, yeah, that's off. Happy Halloween to you, TZ. Happy Halloween, George. Talon, TZ. You paid $45 for two. I see. You barbecuing? Always barbecuing. Tonight's the night, Bob. If you got it, very good. Very good. Talon, welcome. Okay. So just please confirm that music is off, okay? I think it's off on my end. I can't hear it when it's on and when it's off. It's kind of disappointing, to be honest with you. All right, let's talk about economic data. Stuff that's been reported so far this week. Consumer confidence came in better than expected. Job openings worse than expected. ADP, I think that this was a goose. 100,000, over 100,000 beat. I don't believe that number for a second. I think you're going to see major revisions in November, folks. Major revisions. Buckle up. Thanks, Pete. Thanks, George. Appreciate that. GDP came in worse than expected. Personal spending hotter than expected. Personal income on par. What does that tell you? Credit cards, PCE flat. or excuse me, that as expected. PCE year over year, a push. PCE at the core, push. PCE year over year, a little bit hotter than expected. Initial jobless claims, miss. Employment cost index, miss. That's actually bullish for the markets, but they didn't care today. Unemployment report, that comes out tomorrow. They're only expecting 110,000 jobs. It'll probably be 400,000, some ridiculous number. Worry about the revisions. We have less than 6 days to go to the election, and silly season has just begun. In terms of valuations of the market, we are looking at a market that is priced for perfection. 36.3 down from 37 when we began the week, but still very elevated, and we are just off the highs of October of 2021, which came in at about 37, 38, around there. 38.58 to be specific. Fed Watch tool, not much to talk about here. Not much is going to happen except for a quarter basis point cut. That's pretty much locked and loaded. Let's take a look at December and get curious about it. Probability of an ease in December, 99% probability of an ease. They're factoring in a half basis point cut. No, this should go to about a quarter basis point cut. Okay. So more rate cuts to come. So in terms of earnings this week, a mixed bag. AMD, I don't know how they closed, but I know last night they were getting hammered. Meta, hammered today. Coinbase, hammered today. We'll go to those charts in a moment. In fact, let's bring them up and let's talk about how they closed out the session. Let's begin with AMD. Let's go. Here we go. So AMD on the week. We're just going to talk about the weekly charts because these are what matter. At current week, AMD is in a downtrend. I know it's hard to believe, but it is in a downtrend. Let's take off the automated trend lines. Crisp, clear, concise. Let's take these off. Let's just keep my drawings on. You know what? Let's see what the trend lines. This is good. Let's keep the trend lines up. So we're using TrendSpider automated technical analysis. Use the link below and get a minimum of 35% off. Use that link below, automated technical analysis. And we can also throw up fundamentals, which is revenue growth. And you can see revenue growth has been declining. Here is the, actually, I stand corrected. From the June quarter, we actually rose. But since Q4 2023, it's been a grind lower. So they broke us out back here. You can argue here, but let's go here. On the 30th, the week of the 30th of September, what did they do? They failed to hold a breakout point. And at current, it appears poised that we have a bull trap, and we will, in all probability, move lower from here. Next price target on AMD, $132.61. Now, the Google, they are off of the highs of the week. Now, I would get concerned about Alphabet, I should say. If we fail to hold this support level here, let's talk about the lows of the week. The lows of the week are 163.95. If we can't hold that support level, Alphabet is in a bit of trouble going into the new trading week. But remember, we don't want to get overly bearish on the market. November is a seasonally favorable period of time. It's the best month. In fact, let's bring up seasonality and talk about it for a moment. You know, you can't dismiss this. 71% of the times, Alphabet is up going back 20 years. AMD, since we skipped over it, let's go back. Not as good, but AMD going back 50 years is up around 65% in the month of November. Now, that doesn't mean on November 1st they need to go up. They could start the week off down and then rally back by the end of the month. So our short position is not overly aggressive right now. Let's take a look at Microsoft. Microsoft is in a bit of trouble. You know, Microsoft's been grinding lower for a while now. You know, I actually have those lines up there. I'm going to take all these off. There we go. Start fresh. So here you have it. This is your downtrend channel. If you could believe it or not, Microsoft's in a downtrend. Now, you could argue that this is just simply a consolidation appearing as a downtrend. Okay, call, you say tomato, I say tomato. Doesn't matter. But the price action here has been weak for quite a while. And when you overlay, we spoke about this last night, when you overlay the S&P 500 and you bring up a monthly chart, you could see that Microsoft was trading with the S&P 500. That all ended a few months ago, back in July, technically, where the S&P 500 went on to make new all-time record highs. Microsoft did not. And at one point, a couple of weeks ago, it threatened a bearish crossover of the 50-day crossing down below the 200-day moving average. Now, looking at what else reported this week? What are we interested in? Visa. Visa's looking really good here. There's more upside to be had here on Visa up to around 304. Then it may be time to pull the ripcord, but it looks pretty good from this vantage point at current. Altria, MO. Very strong price action here. The problem with Altria, for those looking to put on a long trade, a couple of things. Take a look at the fundamentals. Revenue growth, declining, yet we rallied, and we rallied right up and into a resistance level. This is the value of the automated trend lines. Click of a button, and there you have it. So warning flag on the track for Altria. So this is a weekly chart. Let's overlay the monthly chart. And that coincides with monthly resistance, I guess. Oh, I know what it is. No, can't do it. Strange. Okay. Can't overlay the monthly resistance levels for some reason today. All right. What else is out there that we want to take a look at? Then we're going to go to the weekly, the sectors individually. And we will talk about those. Chipotle, I believe they had disappointing earnings. Yeah. So Chipotle is in trouble. Potential double top on a weekly time frame on Chipotle. If we break and close down below 47 bucks a share, it's got a lot of problems. Now, this is a company with great revenue growth, but it's in a spat of trouble right now. I don't know what their earnings look like. And I believe Let's take a look at the weekly chart's not going to be reflective of Apple's earnings. The daily chart will be. It won't reflect the after hours session on a weekly time frame. What the heck is going on here? I typed in the wrong symbol. Okay. So Apple, again, this is not reflective of the after hours price action. We've been bumping up against this upper band of resistance in blue. Again, the automated trend lines. And we're beginning to give way. It looks like we'll probably weaken up tomorrow. Let's go to the daily chart. Is this reflective of the after hours price action? No, it is not. This is reflective of the after hours price action. And we're bouncing off of support level number 1 at 221.72, support level number 2, 218.74 for you home gamers. I think I just stole a line from what's his plus Kramer. RSI really weakening up here. Revenue has been flat. Let's go to a quarterly chart. Yeah, it's been pretty much flat. So expect probably a retest of 207.92, 206.95. Let's call it. We're probably going down to around here. Let's overlay. Why is this not working today? There we go. Okay, so I just overlaid on a daily chart monthly support below, and that's all the way down here at 212 per share on Apple. So warning flag on the track for Apple. Amazon. This is not indicative of the after hours price action. Let's bring that up. This is indicative of the after hours price action. But we are at resistance at let's call it 198 on Amazon. Let's go to a monthly view. This is not indicative of the after hours price action. And we have resistance at 198. We'll see how we close out the week. So those are the charts that are of interest to a lot of us. Now, I want to go over Boeing for a moment. We've been buying up Boeing stock, and I don't even know how it closed on the day. I just stopped looking. This is more of a longer-term play for us because they've thrown everything at this company. They did a capital raise, and it rallied off the lows of the session. So I'm glad I didn't panic this morning and sell the shares. Now, I'm happy to see events like this. So when I look at a stock like Boeing as a longer-term investment, this is not a trade for me. It's a longer-term investment. I look at stocks that have, this is a pure contrarian view, okay? I look for stocks that have bad news after bad news being thrown at them, and they drop like a rock. And then all of a sudden that news begins to pile up. It gets worse. It gets worse. And then one day the share price, you know what? It doesn't go down anymore. So what does that tell you? It means all the weak-handed buyers, all the institutions that wanted out because they saw no end in sight, and fairly so. Let's face it, over the past 5 years, this stock has been a train wreck. So who's going to blame anybody for wanting to free up their cash and put it to work elsewhere in a bull market? Can't blame them. But now we're at the point where you need to start taking a look at Boeing. And I adhere to the William J. O'Neill style of investing, where I look at stocks that have the N in CAN SLIM. That's an acronym for the Investors Business Daily hypothesis or strategy for trading. The N in CAN SLIM is new. What is new? And I'm always listening. for what's new. So what's new is that you have old management out, new management in, and very, very qualified management at that. And really the chart is secondary to, and that's probably shocking for a lot of people that follow me for a long time, but yes, it's secondary because I'm going by price action more so than anything else. We'll talk about the monthly chart in a moment. It's not important right now. So the reason why I talk about Boeing tonight, I had no plan to, but this gets me very, very excited. This is a change in culture. What happened at Boeing is that they got so woke. They took their eye off the ball of quality. They handed the reins over to HR and to the accounting division, and they took their eye off of quality. So they became penny wise, dollar foolish, and they paid the price for it. So now what we want to do is take advantage of what's new. And this is not a short-term trade. Oh, actually, let me stand corrected here. They have the strike going on. It's a West Coast strike. And they've had two contracts that have been voted down. Contract number one voted down by 99%, 95% of the union. Contract number two was voted down by about 66% of the union. Next contract, pretty much guaranteed, is going to fly, pardon the pun, kind of pun intended. I could have pulled that one. I didn't think about it. It just flew out my mouth. So I'm going to take credit for that one. Pun entirely intended. So now that we have a catalyst, that strike ending, you could say that, yeah, we have a trade setting up here, a short covering rally. So me as a longer term investor, I'm looking at some saying, okay, Boeing bails on diversity division, reverts to a merit-based system. Bravo. Bravo. As a matter of fact, I'm so excited. I want to see what Boeing is doing in the after-hours session. I don't know if this was an announcement after hours or what, but let's see what it's doing. Look at that. Look at that. Up a few bucks in the after-hours session. So we close out the day at 149 spot 31. Last tick 152 spot 42, bouncing off of resistance. So Boeing looking pretty good. You know what? Let me do this. Let me get my ugly mug out of the way and swap these so you can see. There we go. That should be better. Yeah, that's better. So that's Boeing. Let's go to comments. Say hello to folks. Going to buy HLF, I think, tomorrow, since a big beat of 57 profit and raised outlook. All right. Michael Anthony, Bob, BA loss over $10 or $10.40 earnings. How? Just post a request in the forum, Michael. Polish Taco. Hi, Bob. Hello, Polish Taco. I love that name. Do you expect a washout with the Qs tomorrow? We'll take a look at the chart. So my attitude when we go into a possible correction is that ideally, if you're looking for that reversal bar, you'll get a red morning. You want to see red futures. You want to see a sell-off in the morning. Sounds counterintuitive. So what you want to happen is that if it's many times you'll have the institutions, they'll know, they're the big players. They're hanging out tonight having cocktails, dressed up as, whatever they dress up as in the 1%. And they're deciding upon where they're going to find support in this market. But there's a problem. There's a problem that they encounter because they have a lot of money to put to work. They're commiserating. They know that there's going to be a lot of buying at a certain level. What do they need to do? They need to blow out stops. How do they do that? Well, there's a coordinated effort to sell the market off, ideally red futures. People pull stops. They sell it into the open because they're afraid of another 2% down day. And then all of a sudden, you get a reversal. The money flows in because now all of a sudden the institutions have liquidity. That's the name or the word that they worry about the most. Is there enough liquidity for me to build a position and or to exit a position? This is why we watch volume so closely. If I see the markets rising to new all-time highs on light volume, which we've been doing, I worry about liquidity and the ability of the market to withstand any amount of sizable pressure. Because if you didn't have a lot of volatility, a lot of volume on the way up, who's going to support the market? Mom and pop was buying 100 shares of NVIDIA, an algorithm which was day trading NVIDIA up on light volume. Give me a break. They're not going to step in and backstop the market. You're going to need to have support levels get hit where you have institutions that think that they're going to have an opportunity, A, to get a short covering rally going, or B, they see value in the market, which we don't have yet, value in the market to get long in the market for the longer term. Now, they could be setting up for a seasonality play into November. Entirely possible. Entirely possible. So we'll go over the chart of the Qs in a little while, and we'll talk about it. But Boeing, good news there. Let's go to the weekly charts. We went over the Fed Watch tool. Yield curve. We'll begin with the yield curve first. The yield curve, this is updated, is down on the week. Normally I'm talking about this quite a bit. I haven't been talking about it as much. I keep an eye on it every day. But the reason is that we've stopped going up. We're uninverted, but we've stopped going up. So that matters to me. Now we have one trading day left to go. A lot can happen here. We did have a sell-off in the markets today. We'll talk about volume in a moment because volume matters. That'll tell us just how much conviction the institutions had today to unload and go to cash. I don't think they did, TZ. I think Elon's doing that or has done that. I haven't followed it, to be honest with you, but I know that they were unable to do so, which is scary. CRB commodity index, commodities are down. So I hate to say this, but I get this vibe, and I think it's being validated by the tips. It's being validated by precious metals. And today, gold. We shorted gold last night in the futures market, and it wasn't a big position. I carried it overnight. I booked profits earlier this morning, and so I didn't capture the whole move down on gold on the day, but we made a few bucks on it, and finally it buckled. We booked profits on our gold stocks, half profits on our gold stocks a week and a half ago, about there, and I'm glad we did because those names got taken to the woodshed today. We'll go to those names in a moment. We'll talk about, is it time to buy back in, which I completely intend upon doing, but I have one concern: disinflation. Are we seeing a pause in inflation? Not that wages are going up, not that prices are going down, but are we flatlining for a while? If we get that type of environment and we have economic growth, it's going to be very, very difficult for gold to continue up higher. Now, if we get inflation that stays on par, and then we get jobless claims rolling over, reported tomorrow. I doubt they're going to report a bad number tomorrow. Wait for the revision at the end of November, beginning of December. That's going to be the tail of the tape. But if we get strong economic growth or a growth in the economy, that's not stagflationary. So we may get a pullback here in gold stocks and in gold, at least for the next month or two. So, and in silver. So we booked some profits there. We made them real, and we'll put it to work elsewhere. TLT, I'm long of bonds, and this is by far my worst performing position. I put money in there thinking it would be a safe haven rather than going to cash, and it didn't work out that way. So we plan, God smiles, as my friend Richie would say. So we are at current down below weekly support on the TLT. I think we're going to pop here. Actually, I'm sorry. This is a daily chart, weekly chart. Same deal, right below resistance. 10-year yield. I warned about this last week. We had broken out, continuation move up higher. We're rallying up and into resistance. This is a problem, folks. It's a problem, especially for the small caps. Tips. So a few weeks ago, we began to peter out, and I didn't verbalize it, but I began to become a little bit suspect of the inflation narrative because tips had stopped going up, yields began to rally, and this is after the Federal Reserve cut by a half basis point. Okay. Maybe the Fed knew a little bit more than we gave them credit for. Because the only thing the Federal Reserve hates more than inflation is deflation. And that could be the reason behind their logic for cutting by 50 basis points. The dollar. The dollar bearish reversal bar on the week. What did it do on the day today? It was down on the day fractionally, not horrible. We may rally here, but I think they're going to fade the rally because when you take a look at the euro on a weekly chart, euro flashed a bullish key reversal bar. And in fact, this week on a weekly time frame, you had a golden cross weekly time frame, meaning the 50 period moving average crossed above the 200 period moving average. And we're at the highs of the week. Let's take a look at the yen. Bullish key reversal bar here. One trading day left to go. A lot can happen, but so far, the euro and yen, which trade against the U.S. dollar, are looking bullish, where the dollar appears to be doing some petering out. Bitcoin remains up on the week by over 3.5%. Let's see what it did on the day. Down over 2.5%. Volatility. This is a big breakout on volatility, folks. We're up nearly 14%. And we didn't break out this week. We broke out last week. And not many people paid attention to that. We did. We spoke about it on the week ahead commentary because every Saturday we go over these same charts again. And then we talk about our strategy for the new trading week. And we knew that we had a breakout on the VIX. And we also knew that we had some breakdowns on the major averages. Therefore, be very, very careful with loading up on longs. So let's see what we did on a daily view on the VIX. Strong day, up nearly 14% on the session. And it looks as though there's more room to run to the upside. Dow Jones transports still holding a weekly breakout. Remember, we broke out 2 weeks ago, failed last week. This is an attempt this week to recapture that breakout point. One trading day left to go. A lot can happen. Moving on to the Dow Jones Industrial Average. So this is what I meant earlier, that the markets began to break down. Not this week, last week. And this is what we were talking about with members on Saturday. We were in an ascending wedge formation, and we broke that ascending wedge formation last week, not this week. This week is a continuation breakdown. This is the reason why we added to shorts last week and lightened up on longs, in fact. S&P 500, weekly view. Now, this is the cap weighted. We're going to go to the equal weighted in a moment. We broke down last week. It's hard to see, but we closed out the week down below this lower band of support. This week, a continuation breakdown. Lower highs. The RSI has been flashing bearish divergences for weeks now on the S&P 500. And take note, while we were putting in all-time record highs week after week, what was volume doing? Going down. That's not good. If you want volume when you're making new all-time record highs to be at or above average. If you have a week of below average volume to the upside, yet it makes it up the next week, fine. As long as it's flirting with its moving average. We've really declined dramatically here from the moving average in red. MACD at current, with one trading day left to go, appears to be going red on the week, negative. Now let's take a look at the equal weighted basket. And this is more clearly indicative of the breakdown we saw last week versus the market cap weighted basket. And this week, a continuation breakdown. Volume is not that bad. It wasn't that bad last week either. Let's go to a daily view. Let's go to the S&P 500. It's got more volume. Let's see how we closed out the day. Woofa. Closed out the day just shy of 2% on volume. Trip queues. We're going to do the same thing here and talk about the cap weighted QQQ and the equal weighted QQE. Or is it the QQQE? I always forget. QQEW. So we broke down this week. We added the shorts last week in anticipation of this. Let's go to a daily view. And folks, while I'm thinking about it, may I ask you to like and subscribe? You would be helping out quite a bit with the YouTube algorithm. Please, I beg of you, thank you so much. And we have about 82 folks on right now. 82 likes and subscribes would be awesome. So thank you very much and happy Halloween. Trip Q's daily view, closing down over 2.5%. So here's what I think is going to happen here tomorrow. One of three things, and this is going to sound like, I've got all bases covered, and kind of I do. But I'll give you what I think is going to happen in priority. One, we can move lower automatically out of the gate. That's option number one. Option number two, we gap up above 485 and we close there. That is support. Third scenario is that we rally in the morning, flirt with 485, then we fade and close down below it. So I think that we're going to go with option number three is we gap up and we close there. Actually, no, I'm sorry. Option number three is that we just open lower and we stay lower. Option number two is that we gap up above 485, we close there or higher. Option number three is that we open flat to down and then we rally up to 485. We could possibly retrace 50% of today's rally or a sell-off, I should say. And then we fade and move lower and close down below 485.50. That's what I think is going to happen. That's my guess. I'm sticking to it. Volume today. Huge volume. So where we've seen a rally in the markets, by and large, with the exception of this one day here on the 25th, of a rally on below subpar volume algorithms, mom and pop buying 100 shares of spiders. Today we saw whales come out and they sold. Let's take a look at the intraday view and see how they close this out. Let's go to a 30-minute view. Wow, this is a brutal close. This was brutal. So let's see what Apple's doing right now. And Amazon. I have kids knocking, ringing my doorbell. I hope somebody's up there to give them candy. Okay, so Apple, what the heck happened here? Oh, Apple folded. No, Apple was, I'm thinking Amazon. Okay. Amazon was the most important one. So Apple's going to open lower tomorrow. Amazon. Is it holding gains? Yeah, it's holding gains. So when it comes down to the Qs, the two top weighted stocks in the triple Qs are Apple and Microsoft. So as goes Microsoft and Apple, so goes the triple Q names. But we did leave pretty oversold as measured by the RSI and as measured by the stochastics. So my game plan tomorrow is I will probably, if they gap us down tomorrow morning, I'm probably going to make some short profits real in anticipation of a rally back. I don't think they would necessarily going to rally strong and close strong, but I can always reestablish short positions later on in the day if we begin to fade. So if they gap us down tomorrow, I suspect that they're going to rally us back. Let's go back to that daily chart, and they're going to rally us back into 485. That'll be resistance level number 1 tomorrow. Now, taking a look at the equal weighted triple Qs, we're down 2% on the week. What were the Qs down? Qs are down 2.5% on the day. On the week, we're down 2.32%. So the heavyweights are obviously weighing on the overall index. Now, we broke down this week on the equal weighted. Very thin volume here. Very, very thin volume. Small caps. I haven't added to small caps whatsoever. I didn't sell them. I didn't buy them though, because the narrative was that we would see a rally in the small caps due to interest rate cuts. The problem is with that thesis is that while technically that is true, it's usually true 6 months out from the first rate cut. Usually when the Federal Reserve cuts rates, equities go down soon thereafter due to the fact that they need to come back and address bigger issues in the market. So far, to be fair and not hyperbolic, we haven't seen that yet. We haven't seen that. Could it be the election could be a big problem? If, I was listening to Patrick Bet-David last night. He was interviewing this guy, and I'll be honest with you, I wanted to go to bed at like 9 o'clock last night. I couldn't turn this off. I'm going to find this because this guy kept me up. And let's go to, we have 10 likes. Guys, give me a like, please. I beg of you. Only 10 likes so far. Patrick Bet-David. I want to play this. I'm not going to play it. I'm going to post the link. It's a really must watch. because this dude scared the heck out of me. Let me post this in there. The shenanigans that he's expecting with this election are, frankly, they're not letting me post a message. Can't post messages to some channels. Did that link come through on your end?
Friends that I have that say
last election cycle, YouTube was playing a lot of games with my streams and videos. I just want to make sure that came through.
a national abortion ban puts the law.
Yeah, that came through on your end. All right, good. Okay. So with the yields moving up higher, avoid small caps right now. Better pray out there. The banks, wow, man, they took it on the chin today. 1.38% on the day. Let's bring up the regional banks. Remember, if you're looking to buy the small caps, you need to have your regional banks and your biotechs doing well, neither of which did good today. Regional banks are down 1.44%. Let's bring up the biotechs. This is a leveraged product. All we care about is the candlestick action. All right, come on. There we go. Yeah, we broke down today. So avoid small caps right now. If you don't have the regional banks and the biotech sector, avoid them. Those are the two major components. XLK weekly view, a bearish key reversal, a bearish engulfing, an outside reversal bar. Call it cupcakes, call it what you will. It's very, very bearish. This week's price action. No, it's not going to take, right? No, there it goes. So what we did is we formed a potential double top here on the XLK technology ETF. Now what we'll be looking for is breaks to new lower lows. If we break and close down below 190 on the XLK, that's called a new downtrend. We're not there yet. SMH, wow. Bearish engulfing on the SMH. This is the semiconductor sector, folks. Volume light on the week to be fair. Let's see how it traded on the day. Not good. Momentum. So I'm gonna give you an old adage that I use when you have stochastics with both lines trading down below 50. Rallies tend to fade. Do not go chasing rallies tomorrow. Watch how it closes. IGV, software sector. We bailed on this. We booked. Do we book a profit? I think we had a small profit here, and we got out. And right now it appears as though we're going to fail to hold this breakout point. One trading day left to go. We don't know what's going to happen tomorrow. Now, Donald Trump's organization keeps texting me for donations. That's LAB. We already did that. Consumer staples. Brutal week so far. I'm surprised Altria did not help this sector out more. They tried to rally. It was rejected. One of the less worst sectors. Discretionary names. Amazon's out. We'll see how discretionary holds up. I'm prone to short discretionary names, even with Amazon's report. I would have shorted them earlier in the week, but Amazon makes up for 20% of the XLY, and the XLY at current is rallying in the after-hours session by about $1.50. Emerging markets are breaking down. All right, we're going to do some chart requests. I got to meet up with some folks. My last day is sober October, so I got to go meeting up with people. I can't drink alcohol. Tomorrow, though, I have a fine bottle of Japanese single malt that I will be popping open. It has been now 33 days, and sober October will be officially over midnight tonight. And let's go to the members area. All right, let's see what we got. Polish Taco, DRS. Oof. This has run its course. Polish Taco. It's run its course. So very strong price action. We rallied up into, on a monthly chart, we have quarterly resistance and dashed line above. Daily view. I would avoid this right now. You have a nice W formation down here, and we broke out, but I'm worried about that quarterly resistance immediately above. I wouldn't short this. I wouldn't buy it either. I'd wait to see how the market settles out and then take it from there. So I would avoid this right now. Yeah, Coinbase for Sean. This one gave me a bit of a wallop today. So clearly we're in trouble because we're in a downtrend. Let's clear off all these old lines. Let's take off the trend lines. Okay, so let's reestablish the trend. So we are in a downtrend channel on Coinbase. So would I initiate a new position here? No. They had horrible revenues, horrible earnings, and frankly, I should have bailed last night. We have prior support at 194.29. Maybe they'll close it back above it, but I think that if they get a rally back to 194.29 next week, I'm going to sell into that rally. I don't like the price action here at all, and I own it. I'm not speaking my book. I'm not CNBC. And there's only 4 years worth of data, so I can't use seasonality. That wouldn't be right. Daily chart. We're going to give it a little bit of room here, Sean. Not much. Not much. The one benefit for Coinbase right now is that it's highly correlated to Bitcoin. So if Bitcoin continues to rally, remember, Bitcoin had a weekly breakout. If it's able to continue to rally, then Coinbase can continue to move up higher. But it needs Bitcoin. So if Bitcoin pulls back and breaks support, Coinbase and MicroStrategy, they're both going to correct as well. FDX, weekly view, not loving it. Looks to me like a bear flag setup. I don't like it. I think it fades. This is a daily chart. I think this is probably going to fade. I would avoid. Andre? All right. So the Google, we kind of already went over this, but I'll go over it again. Here's the line in the sand. This is a very easy one. 116 is the line in the sand for Alphabet. Where's my there we go. All right, better. So if it fails to hold let's call it 160.40. If it fails to hold that level, it's going lower. So I'm concerned. Potential double top. If we fail 160, we're probably going to take out this low here. That would be at around 148.50. If that happens, then you're in a new downtrend. I would wait. I would watch here. I wouldn't sell it if I were long. If I didn't sell Coinbase, I wouldn't sell Alphabet. Let's go daily view, see how it behaved today. Not horrible, but worry about that weekly chart. It's got to hold support. If it does, then in the next week or two, it could be a buy. Let's check out seasonality, and I got to get going. Reasonable seasonality, a good period of time. November, 65% up usually, 70% of the time up for Google. Let's go to a weekly chart for a moment and see how November usually begins off. So we're here. This is next week. So the next couple of weeks are, on average, a little better than 50% odds of Google Alphabet being up more than 50%. Let's check out SPY. SPY, somewhat better. The first 2 weeks of November. The third week is meh. Final week, very strong. And it's the final week that apparently saves the month for the S&P 500. Very similar price action for the Qs going back 19 years, seasonally going into November. So there's room to go to the downside here, but let's not forget, seasonally, a very favorable period of time. The election, though, could be a hot button issue. I posted that video. Be concerned, folks. Get out and vote. And everybody have a very, very great night. Enjoy your Halloween, and I will talk to you soon. Hit like, subscribe. Don't forget TrendSpider. Get a minimum of 35% discount code below.